Welcome everybody. Well, this is gonna be a little bit of a different occasion. I thought that I'm going to, share some thoughts about what I'm looking for to enter to a trade. I'm gonna share some key takeaways of how I try to look at the market structure. When I try to look for setups, or actually how I'm trying to anticipate where could be the draw on liquidity, right? By the way, FYI, this video is on premiere on a Monday morning when I should have been streaming, but I'm not here because I have some stuff to do, but I hope you guys will enjoy. Anyway, this is gonna be just a raw video. I hope I can make some more in the future. And since some of you guys were actually curious of what I'm looking for when I enter a trade, let's just go over a few examples, and I hope it can help for some of you of how I am actually trying to anticipate these setups. All right, so I have nothing here on the chart right now, so it's just the naked chart. I don't even have the power of 3 indicator, so absolutely nothing. I didn't even know which day to go for here, and obviously when I try to switch between time frames, it can mess up the charts. But anyway, one thing's for sure, what I'm looking for in a setup is basically liquidity levels. Liquidity level could be a 1 hour fair value gap, 15-minute, 5-minute fair value gaps. I'm not really looking into the 30-minute, but don't ask me why. I don't have a special explanation for it. I was just always looking for, because with intraday traders, I was always looking for the 5 and the 15-minute levels. Obviously, the 4 hour, the daily levels are quite important to determine where could be the draw on liquidity. Obviously, we have to watch those as well. But I'm trying to narrow down. I'm always trying to narrow down the best, available times to trade in, for the highest probability trade setups, as I meant to say, which is usually in the kill zones. So I'm going to look for setups and possible levels in the kill zones. Now, it's usually in between 2 a.m. To 5 a.m. London session, and most likely from the 9:30 open up to the 11, or maybe until 12. There's nothing wrong with staying until lunch hour. I'm just looking for the best or high probability setups, and obviously those are the times. But anyway, let me go into some examples and let's look at some levels. One of my favorite setups is, by the way, the morning star or evening star candle formations. Now, if I type it into Google, let me just get a Google here. So there you go. Images, morning star candle setups. Well, not really the perfect ones. That's a morning star, evening star. Not exactly the one I was looking for. I wouldn't think that this is the one I'm looking for, because I don't need the middle candle here. So anyway, let me show you an example, all right? And let's focus on a specific day. Let's go with the New York AM session, for example. Here, New York AM session starts at 7 until officially until 11, but and let's stay on the 5-minute time frame, and you guys will know what I'm trying to say here. So let's zoom this out and let's draw some key levels here. All right, so obviously we had a liquidity sweep here. All right, So we had the liquidity sweep, which is in this case important. First of all, when I look for these candle formations, it's always important for me to go into some level of liquidity. Now, it could be a swing high, a swing low at a key area, or it could be just a decent fair value gap. It could be on the 5, the 15 minute, even on the 30 minute. I'm not saying no for the 30 minute, but you know, the 5, the 15 minute levels, fair value gaps are usually very good for, you know, just short-term trades. But anyway, in this particular example, I'm going to use this liquidity sweep, which happened on the 11th of November at 3:30 a.m., which was actually a London high here. So that's also good. You know, when we sweep high or a low from the previous session, that it's even better. So we swept it, we pushed higher a little bit, and in this case, I'm looking for some kind of a bearish setup, right? So maybe not the best setup here, but let me go with an example. Some of you guys might be saying that this could be a bearish order block or evening star, or I don't even know what to call it, or bearish. It's not really a bearish engulfing candle setup, but let me zoom this out for you. Okay, so that was the sweep. What I'm looking is a push with the bullish candle, make a new high or take up as much liquidity as possible. In this case, it's the 8 a.m. Candle, which was on the 11th of November, the 8 a.m. 5-minute candle, pushing up here, bullish. And then the next candle, the 8:05 candle, was actually turning into a bearish candle. Now, some important criteria about these candles. What makes it valid for me is I need the bearish candle to trade at least one tick below the previous candle. Now, if it has the exact same low, then I would say maybe, but that could be a low probability setup because, you know, it can just keep on pushing higher. But I need at least one tick to trade below the previous one. In this case, this was a valid candle formation. Pushing higher, then closing lower. Actually, not. It doesn't need to be closing lower. I'm sorry. It just needs to trade lower. So if it would trade lower and then going back into like somewhere in the middle of the previous candle's body, that is still valid. Now, I would say if this bearish candle would not close at least below 50% of the body of the previous candle, then, so for example, it would close like a bullish pin bar. It could be a low probability setup, because if this bearish candle would still close bearish but as a pin bar, that would indicate that the buyers are still pretty strong and could be pushing it higher. But in this case, this is a very, very, very good looking candle formation, especially because the bodies of the two candles are almost exactly the same. Now, this is something I really like. So, you know, a few points higher or lower, it doesn't really matter if it's not too far from each other. I mean, these 50% levels could be interesting. So for example, if this bearish candle would close like, let me put, so what's the 50% level of this candle? How much points? It's 14 ticks. 14 ticks. All right. So if, for example, the bearish candle would have closed like here, 14 ticks, like 323.50, that would be also a little bit lower probability, especially if it would have taken this swing low here, because that could be just a signal that it's picking up liquidity already and could be pushing back higher. But so, I mean, anyway, I don't really want it to close more than 50% of the body right here. I'm not really interested in the wicks in this scenario, but you know, as for the body, I don't really want this to be much bigger. I mean, the distance much bigger than 50% of the previous body. All right. So I needed to clarify these because the small details, guys, the small details can definitely matter. So in this scenario, again, let me change this. This traded lower. The bodies look very good. And now here comes risk management. Now I know many of you guys are looking for 20R, 40R, 100R trades, whatever, which is absolutely fine. I did a lot of backtesting, like really a lot of backtesting, not just, you know, not just yesterday or last week. This year, like since almost, I mean, in the past, I don't know, like 8 to 10 months, I had so many backtesting about this specific setups or formations, like so many countless hours, weekends, and just, you know, not you know, to execute the trade, but to collect the information of how many of these trade setups are actually valid. And this is just the 5 minute, but we're going to go deeper into this. That I can fairly say that the 1 to 2 risk to reward ratio has a very good percentage to be taken. Now, for example, entry is going to be a market order on the next candle, at the opening of the next candle. Now, the stop loss would be obviously the high of this bullish candle. That would be the stop. You don't really have to push it too much higher, because if the price would be trading higher than this candle, then obviously it's invalid. So you don't really want to sit in the trade anymore, right? It's totally unnecessary. Now, what I like to use here is the, how do they say, the standard deviation of 2 of the stop loss. So if this is my stop, then the 1 to 2R is down there, right? Obviously, you can look for some levels like a swing low. There's no problem with that. I have not I didn't backtest these kind of setups with swing highs and swing lows. I think it's up to you to do that. I made all of my backtests with the 1 to 2 or 1 to 1.5 scenarios. Now, obviously, you can leave it on. As for the winning percentage, I can say that if you take partial profits at 1R, so if you can close some of your position, obviously, if you go with micros, you are able to close partials. If you close a partial and put it to break even, or you just simply want to put it to break even, I would say that the win ratio is very good in this case. It can be absolutely above 60%. I would say, as far as my calculations were correct, and obviously I did a lot of backtesting, it's nearly I mean 65 to 70% win ratio if you go with just a single 1 to 2 risk to reward ratio. Now, I don't really like to put it to break even. I don't really like to take partial profits. This is how I do it. You know, I was reading quite a lot, and not just Mark Douglas Trading in the Zone, but I was reading quite a lot about this stuff. And how I approach it is, I want to know if my analysis was correct or was I wrong. Now, if I would put this to break even when it's reaching 1R, and I just put it break even, and if it would hit my break even and then go to my original TP, that would drive me nuts. That would mess up my thought process and everything. That would drive me crazy. So I would rather take the full stop in this trade rather than a break even, and then it would go to my TP, and I would be suffering from FOMO for the rest of the session or for the rest of the day, and it would completely derail me from my thought process. Obviously, I change my mind quite a few times because I break my own rules. I have to do something about that. But anyway, the back tests that I have made were specifically just leaving the trade like this. Like, I didn't put it to break even. I have not tested it like with break even and partials. I came up with some average numbers, but most of the time I was checking it with a full stop or with a full TP. Now, it's easy to talk about it like this, like, oh, super. But when you're there in the live market, especially with a funded account or your personal account with a live money, the decision-making process is different, but that's a whole different story. I'm just talking about the trade setup. In this case, the 1 to 2 scenario, perfect, very good. I like this level, but this is just one single trade. So I want to, oh, we had a new week opening gap here. So obviously, if you guys would have utilized the new week opening gap with a runner, there you go, boom. Perfect. You could have just leave a runner. It's up to you. So the risk management is a different question. I'm just talking about the setups. All right. So this was the AM session, New York AM session. And let's continue with this one. I'm looking for fair value gaps. I like to extend these fair value gaps as much as I can and look for possible setups. But as I told you guys, this is not a this is just a raw video. I'm looking for possible fair value gaps here to go with on the 5 minute. I'm not even switching to the 1 minute. There is one here, one here. Let me put one right here. Now let me show you a losing trade right in this scenario. Yeah, it's still valid. So let me show you a loss here. I told you that I like to use fair value gaps. In this scenario, this 5 minute candle closed bearish. Let me zoom it out a little bit more. I'm talking about the 2 p.m. 5 minute candle and the 2:05. Now, what do we see here? Bearish candle. The bullish candle did not trade it below that bearish candle here. It picked up liquidity from this fair value gap, but what it did, it actually traded higher than this bearish candle. So this would have gave me a bullish market entry, I mean market setup here, obviously with a stop loss. So it is what it is, but this is actually a losing trade. Okay, but we're going to talk about those two. So obviously this is, if we just look at the 5 minute candles for this day, for this New York session, I would say we had one winner here. There was no other setups that I have liked here. Now let's look at this candle. All right. Why is this setup invalid? Bullish candle pushing into the gap, picking up liquidity, repricing this. But you see the bearish candle at 1040, it actually traded higher than this one. So that makes it invalid. Although it's a beautiful bearish engulfing candle, so it's a very good setup. And by the way, I do like these kind of bearish engulfing candles, especially because, as I told you, it's not much, it's not this candle's body, which is down here, the close of the candle is not bigger than 50% of this one. So as a bearish engulfing candle, it's still good, but you know, this is not particularly the setups I want to talk about. Anyway, one good setup with 2R and one loss here with negative 1R. That would be 1R for this day, right? So let's go and look for something else. There's gonna be something else here, something in the London session in the same day, because it's still the 11. Here's when the London session starts. Okay, 2 a.m. I mean kill zone, not the London session, but the kill zone officially. Now, it doesn't seem like much to you guys, and I'm still just staying on the 5-minute time frame. But same day, London session. Let me put a fair value gap here, because there was a fair value gap. Not too long after the kill zone, this happened. This fair value gap was created by 220. So this 5-minute candle created this small gap here. Obviously the moves are much slower, distances are much shorter, lower than in New York session, so you gotta take that into accounting, because London sessions tend to be much slower than New York sessions. All right, but anyway, look at this candle, 225, 230. Okay, 225, 230. Exactly what I was saying. We have some targets here potentially to the left, so we can break these highs. Obviously, as particular draw on liquidity, this looks like good, especially if I just look at this area, extend it, we can see that from the Sunday open, this 5-minute gap was rejecting the price here and also here. And you just got to read the tape. So we swept some liquidity here, and this candle right at 2 a.m., look at how beautifully this lined up. If you look at the big picture, you look at everything. So Sunday rejected, during Asia session, it went back up there, got rejected again. All right, whatever, this one just got down here. And right when the kill zone started, it just got rejected from this fair value gap, which is beautiful, and then heading higher. Now that's great. Not just that it created the fair value gap, but it actually created a bullish breaker here. And look at the bullish breaker. Market structure shift right here with the bullish breaker on the 220 candle. And this is beautiful, by the way. This is just beautiful. The way this looks like is just the way as this is the perfect tape reading scenario and the perfect reaction from price. I just love this. So rejected, went down, took liquidity, broke higher, perfect bullish breaker, market structure shift, and still it's not enough. I mean, it could be enough, but this candle is the one I was talking about, the 225 bullish candle here, 225, 230. And look at this. Market entry right here, stop loss just below, maybe one tick below that candle, and looking for 1 to 2 risk to reward ratio. I'm not looking for more. You can look for more, I told you. I'm not looking for more. Look at it. Boom. It actually created a new high. So there you go. Beautiful. Textbook. This is an A++++, A++ textbook entry right here. And I wasn't even going down to the 1 minute. Now I'm going to show you examples, of course, with the 1 minute too, how you can line up with the 5 and the 15 minute on the 1 minute chart. But this is just staying on the 5 minute chart. 1 to 2. Perfect. Now, I know it's easy to say it like this. It's much, trust me guys, making the decision is much harder when you're in the live market. But anyway, beautiful. It doesn't really get any better than this. So this was a beautiful trade here. Then started to reverse down. All right. It seems like the fun never stops. I'm not even switching days or time frames. Okay, let's just continue with the same type of entries. Let's mark up some fair value gaps, right? We're still staying on the 5 minute chart. We're not doing anything crazy, nothing special, just keeping it stupid simple. All right. Okay, so this is not so much good because this is not a bullish candle. The 420, we're still in the kill zone. Obviously, it's up until 5 a.m. Now, I'm not saying you cannot sit for some a little bit longer in the position, but I was just curious about these candles, how they are reacting. There was a rejection here at 420. Let me try to go down to the 1 minute. Maybe there's nothing there. What you can do, if you see some kind of a rejection like this, immediately, for example, on the 5 minute, and there's still some good level. Now, I like this level. Why do I like this level down here? Because it's almost the same scenario. Price got rejected from here, twice. This fair value gap has still been left, let's just say, imbalanced or yeah, inefficient. That would be the ICT version, right? So until this point at 5:30, this candle has been left as inefficient price delivery. So buy side imbalance, sell side inefficiency. So the sellers were inefficient to reprice it, and beautiful rejections just, you know, at the and look at this, just at the kill zone start and right after the equity open, boom, rejected. Now this really means something. So that's why for the rest of the London session, these kind of levels could be interesting. Now, rejection here on the 5 minute, 420. Maybe there's nothing there. Let's just go down to the 1 minute. Now, this is the 11th of November. That's why I don't like trading view. It goes away. It's not holding. It's not holding the chart. Let's go back to the 11th of November. There it is. All right. Yeah. I thought there's going to be something like this. So this is the rejection on that 1 minute. Beautiful, but almost perfect. Now here comes the decision on your end. How much of a risk taker are you in these kind of scenarios? As I was telling you guys, this bearish 1 minute candle right now, let me zoom it out. This bearish 1 minute candle closed more than 50%, actually almost double the size of this body right here. So technically, if we really want to stick to the rules, this is not valid, right? This is not valid. Nevertheless, the candle formation is technically the same. What you can do after you're seeing this 1 minute bearish close, maybe if price comes back to these levels, which it did around 301, 302, you might want to go for a better entry. Or if you are really aggressive, then obviously you can take this. If you anticipate that the price should be going down there, then if you really want to be aggressive, and this was a beautiful rejection, then, you know, if you take it, it's fine. Stop loss obviously right there. And the 1 to 2 risk to reward was actually, I think I took this on one of the streams. I think I took this trade. But anyway, there was some liquidity. So you have to look some other concepts too. There are some liquidity voids here. I'm not going to switch to the mini, but I do remember this day. I mean, I remember that we were, I remember this, that we had liquidity voids on the mini as well. Now in a London session, these liquidity voids, you know, guys, these could be some minor targets for price. So if I see this strong rejection, especially from that 5 minute gap, and maybe you say like, oh, you definitely want to be in the trade, I would say go with half risk. So if you go in usually with 5 or 6 micros, go in with 3 micros. Obviously, you have to predetermine how much you want to risk. But this is a lower probability entry because of the candles. So I think I took this one. I can fairly say I took this one in a London stream. So because I think, yeah, I think I took this one. And the 1 to 2 risk to reward down here. Perfect. Obviously, if you wanted to leave a runner to get down to this gap, you could do so. But you know what? Because this is not a quote-unquote high probability setup, I'm not counting this, okay? So let me go back to the 5-minute. That's what I hate in this. Always, these charts are always going away. So I deleted already the New York session setups, but this is a 2R trade. If you just stick to the very simple and clean setups, that's the 2R. In New York session, we had 1R overall. I deleted that already. So that's 3R for the day. 3R. Easy to say, right? Easy to say, but that's 3R for the day. Anyway, let's go back to the previous week. You know what? Let's go back to maybe to that Monday. All right. I don't even know what is here. Monday London session. All right. Monday London session. Beautiful. Okay. Monday London session starts here. Hold on. Yeah, London session starts here on a Monday. We had some highs here, almost relative equal highs. Beautiful. 5-minute fair value gaps. That's what I start to do every morning or every session. 5-minute gap right there. What else do we have? This is Sunday levels here. New week opening gap. This is not gonna be super accurate, but new week opening gap right here. And there's another, that's the new week opening gap high right there. Not that it really matters now. I mean, it does, but 5-minute fair value gaps. So we gotta look back, you know. That's what I do. I try to look back, look to the left, and see what happened since the Sunday open, right? So it gapped out, took liquidity, went higher. What kind of inefficiencies did it left behind? Now, it left behind quite a few 5-minute gaps. And this is still London session. There's one gap here still. For example, here, there's a gap, 5-minute gap. Okay. All right. And this is after 5 a.m., so it doesn't really matter anyway. There's another one. A very, very tiny 5-minute gap. We might gonna dive down to the 1 minute and check out what happened here. There's also a 5-minute gap here. So let's mark that up too. Okay, interesting setups though, and we're still in the London session until that time. All right, so that's the London session. Now let's try to do this. I already see some super aggressive setups, and anyway, let's go step by step. Step by step. Okay, so if we stay on the 5-minute, I don't see anything special here. Displacement lower. Price did not manage to go up there to reprice this 5-minute up in that area. If you zoom it out, you could say that maybe you're looking for some kind of a bullish setup, but there's nothing here. This bearish gap, which traded through this this bearish candle, which traded through this gap, had another bearish candle here, and this bullish one is just a doji, and it's not valid anyway. There's nothing here that is interesting. Not even this one. This could have been an interesting one if this candle would trade it lower, but it didn't. So let me put my mouse here. So if this candle would have traded lower than this wick, that would have been valid, because this bullish candle actually completely rebalanced or repriced this gap, this bullish candle. And, you know, could have entered maybe a short setup, but this is not valid. And, you know, a nice 1-to-2 risk to reward ratio, but it would have been valid with the wick at least lower than this one. So I'm just trying to come up with these examples for you guys to try to give a better picture. Now, there's one more thing though. If we just stick to the 5-minute, we do have technically a valid setup. Now it's very risky. It's a low probability setup. There's a 5-minute gap here, and there was a bearish candle at 345, and after this we had a bullish push here, very strong push, traded higher than the wick of that candle. Now the problem is, I know I told you guys that this is actually has a much bigger body than this one, so obviously it has a bigger body, so it's technically not valid. Obviously, if you would have entered with a stop here, that could have been a nice little trade there, but it wasn't valid. But so let's leave it at that. Okay, there's nothing there. I'm gonna go down to the 1-minute, by the way, on this chart, just to check out what happened in here and what goes here. So I can say that in this London session on the 5-minute, if we really stick to the rules, to a mechanical approach, there was absolutely no setup. So you would have just been sitting on your hands for almost 3 hours. The only aggressive low probability setup would have been this. All right. Which would have been a winning trade, but it's not too much of a high probability trade. But technically it fits the criteria, but you know, the bodies of the candles are, you know, it's not exactly the same. But you know, let's go down to the 1-minute. Oh my God, I hate this. I have to scroll back all the time. Okay, just let's look at what happened in the 1-minute time frame at those areas. Okay, if we really want to be aggressive and look for setups. So if you're super aggressive in this London session and you're looking for setups, there's nothing here. This bullish candle had another bullish candle, so it's not valid. And this candle has not traded above this one, so we didn't have the push for the bearish. Okay, so this is not valid. None of these candles are valid because I would have required from any of these bullish candles to trade higher than the high of this one, which is 191. So none of these 1-minute candles are actually valid here. Nothing. All right, so these are not valid. Okay, traded pushed higher, traded on to this level. Nothing here. Absolutely no setup here on the 1-minute. No setup. Absolutely no setup. We left the fair value gap trading lower. Okay, nothing special. Here's the next level. This 5-minute gap, the 1-minute didn't really do anything. Now this is a classic YouTube 2022 setup, by the way. Took liquidity, displacement, immediate displacement, beautiful small fair value gap here. And by the way, I think we took this setup on stream. I think we took this one with the classic entry. anyway. So obviously this could be a nice classic 2022 model long setup, but it was a sweaty one for sure about this. But anyway, nothing there, so let's just leave it at that. We're just concentrating on this system I'm trying to explain here. So nothing here, absolutely no setup, not on the 1 minute. Okay, so the 5 a.m. is here and we're left with no setup, absolutely no setup, nothing, no key level that has been how should I say, no key level on the 5 minute or 15 minute or higher, no reaction that we really liked. So this one just there, it's a no trade zone here in this London session, pretty much. Maybe I missed something, but no, I don't think I did. Absolutely a no trade session if you really want to stick with the rules, okay? But there's always a but. Here was a long setup, both on the 5 and the 1 minute. This is the 2022 entry if you want to go super aggressive, but otherwise nothing. But let's assume, just for the sake of example, okay, let's assume that, for example, here this would be still in the kill zone. It could technically be in the kill zone, right? So this is still a 5 minute BC. So 5 minute BC, buy side imbalance, sell side inefficiency. Price left this gap, came back down here, and look at this. Let me zoom it out. Let me zoom it out. We have this 5 minute BC. And look at what happened on the 1 minute. Let's just assume, for the sake of example, I'm not going to count this obviously, but just for the sake of example, 5 minute gap. For example, this is still in the kill zone. Obviously, you can trade this if you want to, if you trade until 6 a.m. Bearish candle, repricing, completely rebalancing this 5 minute gap. Then a bullish push, not a perfect one. Now, I mean, nice push, but the body of the candle, well, it's a little bit higher, but still, I like it. I would have taken this trade because if this would be in a kill zone, I would have taken this trade because I do like this reaction. I like that these two bodies are actually thick enough. You know, we have thick bodies. Obviously, I don't want to go down like this is 1 or 2 points of difference. So I'm not going to count the ticks now, but we have some thick bodies. Nice, real bullish push here. It did not trade it lower than this. The reaction happened in the 5 minute BC. So when I see this market order at the next candle, for example, there, stop loss maybe 1 tick lower right there, and of course the 1 to 2 risk to reward. Boom, there you go. And what I just meant to say, if you really see something good happening in the 5 minute, sorry, on the 1 minute chart, but it's happening in the 5 minute fair value gap, or it could be a 15 minute as well. But if you see your setup in the kill zone, you already anticipated that the price delivery could be going higher because you see that this is a strong level. You know, make some calculations for risk to reward and how much you want to risk on this particular trade, and this could have been a good one, obviously. Okay, but let's go back to the 5 minute again, and let's just go. I'm really curious how this day would have gone, so let's just go to the next session, which is the same day. Here comes the New York AM session. I'm not usually trading from 7 a.m., but you know, officially this is the kill zone. Same day. Okay, and let's just draw some 5-minute gap here. All right, nothing. I can draw this, but there's nothing happened here, so we can leave this as it is. And what's happening down here? Still nothing down here. I can already tell you guys that there's nothing in here. Well, maybe. Now the question is now, are we going to look for every single trade on the 1 and the 5-minute, or only on the 5-minute? On the 5-minute, if you're looking for the exact entries on the 5-minute, I don't see anything here. Nothing. Nothing. So if you stay on the same time frame, there's no key levels that has been taken. Maybe I'm trying to look twice or 3 times. I don't want to miss anything, but there's no key levels that has been I mean, that has been taken. It has repriced this, for example. This is like an inversion gap. This candle repriced it, but it wasn't a nice bullish push. Bearish candle, the bullish candle traded lower, you know, it's not valid. Then it went lower, didn't do anything much. Another inversion gap here after the open. It took some liquidity here. It was almost a valid setup on this 5-minute. So let me show you. The 950 candle, beautiful bearish candle. And here's what you have to look for. Beautiful bearish candle. Traded into the fair value gap, picked up liquidity. Very good. I like that. You don't have to overcomplicate it. Picked up liquidity. I was waiting. I think I was waiting. I was waiting for this 5-minute candle just to trade higher. Just to trade higher. What was the high of this? 136. So I just wanted this to go higher than 136. 136.25 would have been the number, but it didn't. But if, what if? But this would have traded there. Then this could have been a nice long setup. So from the next candle, I guess somewhere up there or whatever, you know, could have been a real nice. Oh, almost. Barely a 1 to 2 setup, but anyway, barely. But it didn't. Anyway, so this is not valid on this 5-minute candle. Created another fair value gap, no reaction, nothing there. What really interesting is, and I told you guys that I also do the same thing, like if you're trading until the lunch hour in the AM session, then there is a possible short setup here. There is a possible short setup. So here's the lunch hour at 12. And what do we see here? Swept some liquidity. There was a fair value gap here on the 5-minute. It's not a strong one. It's not a strong one, but almost like a little bit of a swing high here. Because this fair value gap from the London session from 230 already rejected price once. So it became not kind of super important, but you know, it did have a reaction, right? So we had the reaction that we want. So I like to see fair value gaps with some kind of a reaction already on price. So here price actually respected this fair value gap and turned lower, and it was quite good. So you can mark this up, and obviously it's easy to say, I know, shoulda, woulda, coulda, but this is again a good example. Maybe not such a higher probability trade, but you can take it with lower risk. So fair value gap at 11:10 a.m. it has been completely repriced. Right? But what do we see here? of course, we see our favorite formation, and we're not even switching time frames. Guys, we are not switching. We're just staying on the 5 minute. Not doing the analysis paralysis thing here. Not complicating anything. Just looking for these levels. Look at this. Boom. Right here. Beautiful. Beautiful. Now, if I would have seen this, I don't know if I have taken. I'm not sure I was streaming by this time. Anyway. Beautiful. Beautiful short setup. Beautiful short setup. Nice reaction on the 5 minute gap. 1 to 2 risk to reward. Boom. There you go. Beautiful. That's it. Okay. Interesting. No, okay, nothing. Interesting, but yeah, I have to say this. So when the price did this, it was actually somewhere around, yeah, it was around 11 a.m., but the macro was already kicking in here. So I guess this reaction here had to do something with the macro as well. So I like the fact that this actual setup, which was completed at 11:15, was not too much after the macro. So as some of you guys are saying, at the time and price, you know, it could be really important. Time and price for these specific areas. Anyway, beautiful 2-hour trade. So nothing on the London session, sitting on your hands, not switching, overcomplicating to the 1 minute, not doing anything, and 2-hour here. Anyway, but this would have been a quiet session. But let's move on to maybe the PM session. Do we see anything that could be good? I'm gonna speed this up a little bit to come up with some more examples. All right, look at that. The next example, PM session. I know you guys like the PM session too, right? I'm not really trading that too much, but PM session. Now, what did I just do? 5 minute CB. Oh, sorry. 5 minute CB. Right there. I think you guys already know what I'm trying to say here. What's the time? The PM session usually is from 1 p.m. or 1:30, something like that. Some people say 1 p.m. Some people say 1:30. I did hear ICT saying both of it, so I have no idea. I specifically saved the video when ICT is saying 1:30, but he also said in another video that 1 p.m. So who the hell knows? But anyway, this is in the PM session. And this is it. It's just screaming. It's screaming, you know, take me. Take the trade. You gotta. Anyway, here it is. Boom. Perfect. This is like almost an A++. Maybe not the perfect one, but I would say yeah. A+. I'm gonna go with this. A+ setup. I don't care. Why? Still in a fair value gap. Beautiful reaction. PM session kill zone. What do you want? Perfect. Perfect. And these levels were already taken. I like it. I like it. We still have some fair value gaps. Needs to be rebalanced down there or repriced, which it did later. What do you want? And I wasn't even going down to the 1 minute. I was just staying in the 5 minute. Obviously, I'm talking too much about the 5 minute now. But patience is the key. By the way, guys, if you like the video so far, please push the like button and subscribe to the channel. And also, I would like to hear your comments or read your comments. And yeah. Anyway, I'm gonna try to do some more videos like this. If you have questions, just let me know. Put it in the comment there, or maybe you guys are chatting because it's a premiere right now. So if you are here live, I wish you a beautiful Monday, because this premieres on a Monday. Beautiful Monday to everybody. God bless you all. I'll be in the New York session, by the way. And if you're watching this video later, please leave a comment anyway. Okay. So 5 minute, 1 to 2. I think this is it. So if I have a trade like this, and it's done by 3:15, why would I want to push anything else? 2R. Okay. So let's move on. Let's move on to the next day. All right. Just a few more examples like this. I know there are some details I didn't talk about. I must be missing out some small details. The key thing is that, so let's summarize this. Look for I need to lower this. You guys don't see this. Not this. Look for key areas. Okay. Fair value gap, swing highs and lows. (5-minute / 15-minute fair value gaps, swing highs and lows. All right. This looks awful. Look for bullish bearish candle, formation. Obviously the one I showed you guys. First of all, look at market structure. Mark up your key areas. It looks stupid, right? Anyway, I wanted to put some check mark here, but these are the steps basically. It's not super complicated, right? Now I'm thinking, why did I just wrote this? But this is all that is to it. I mean, it's really nothing more. But anyway, let's look at the London session here. Okay, look to the left. Oh yeah, look to the left. I'm gonna put this here. Look to the left. What do we see? We have a new day opening gap here, right? No? Yeah, we do. Whatever. I don't know. What is happening? I don't know. Anyway, no. Look to the left. We have some swing highs, but no fair value gaps. I do love to use these fair value gaps, but if a gap has been already repriced, it's not that important to me anymore. Obviously, I extend it, I take a look at it, and I see if it has some kind of a reaction, but anyway, let's put this away. Fair value gap here. Let's start with this one again. 2 a.m. Let's draw some levels. I don't know what I'm looking for. Obviously, we're going to have losing trades as well, so it's not the holy grail. Okay. I'm already seeing something. All right. I love this. It's a little bit of a risky one, but I'm already seeing something, and this is quite important as well. Bullish breaker. Market structure shift, obviously. Look at this. Another prime example. Yes, we see this. All right. Now, what does ICT saying? No, and I agree with that. Even one single tick. I repeat that 2 more times. Okay, let's make it 3. One single tick can change the whole delivery process here. Okay, one single tick. That's too much now. Okay, bearish candle, boom, took liquidity. I know it looks like a doji, whatever. I know. I can take the heat, but bullish candle trades higher. This is such a beautiful setup. Again, I know it's a doji, almost like a doji, but it's bullish. I mean, bearish here, bullish here. So pushing down to liquidity, back there, trade above this candle, nice. And extra confirmation. I know this is scary here. I know this is the only thing that scares many people. Liquidity void on the 5 minute. If you see a liquidity void on the 5 minute, it's scary in a way, but it can also be useful for later. So let's just talk about this this gap a little bit later. Let's extend this gap. Extend to the right. Okay. It could be useful for later. Okay. So going down, going up, beautiful setup. Market entry here. Stop loss just 1 tick below. You can put your stop wider, but I don't see any reason why to use a wider stop, because if it trades below this level, it's not valid anymore. It might gonna, most probable thing that's gonna happen after this is gonna reprice all the way down there, maybe even down to the it's not liquidity void, by the way. I'm such stupid. It's gonna go down to the unbalanced price range down there, so it's not a liquidity void. I'm recording this on a Sunday. I already had my coffee and I'm still tired. I don't know what the hell is with me. Anyway, 1 to 2 risk to reward. Boom. Valid in the London kill zone. Bullish breaker. Beautiful bullish breaker. Market structure shift. Yeah, it could have swept some more liquidity. Yeah, I know. It's not the most perfect bullish breaker, but it did. Nice displacement. I love it. This is just an extra confirmation seeing this. So I do like it. All right. Okay, so 5 a.m. What do we look here? Okay, nothing. Almost took this. Look at that. Almost took this gap completely, but it didn't. 5 minute gap here. Anyway, this London session provided a really, really nice bullish setup here. And I wasn't even switching again to the 1 minute or whatever. We were just staying on the 5 here. I think this video is going to be all about the 5 minute, right? Maybe I'm going to do a next one and we're going to dive subatomic, like in Ant-Man or whatever. And check that too. Anyway, 2R, 1 single trade in London session. No overcomplication, keeping it super stupid, simple. Okay. That's it. No analysis paralysis. So moving on. 7 a.m. starts here. Nothing special. No fair value gaps. I mean, we do have a fair value gap here. Let me draw this. I have to get rid of the extension here. Okay, so finally we do have a loss. Finally. Such a good thing to have a loss. Okay, so this trade actually fits the criteria perfectly. And it's a loss. Bullish candle repricing the when was it? At 8. Okay, repricing this area. Bearish trading below this candle. So yeah, what can we do? This is a loss here, but still, you know, this would have been a 1 to 2 risk to reward, and this is a loss. I would have taken this trade 100% because down here this unbalanced price range was still there, and look at that, you know, taking the stop here and then going back down. Anyway, what can we do, right? So after that, we had the stock exchange open. Let's draw a fair value gap here. Now, this was a very, very strong bullish move here. Very strong. And I'm not sure. I tried to remember this day. I think what happened was ES was pushing higher or something. I'm not sure, but this was quite a strong push. And obviously, this created us another PD array in this 5-minute gap. And here's your next possible setup. At this time of the day already, because we're trading higher, it's pretty much obvious that this is, or this could be turning into a much more bullish day, pushing up there. Oh yeah. So if I zoom out, I'm not gonna switch the time frame, but look at this. I bet that if I would have switched to a 1 hour time frame or 30-minute, whatever, there would be a nice little swing high here that looks like a bearish order block or whatever. But I do like these kind of swing levels here. I'm sure I marked this up at that day, but I'm gonna put a oh sorry, not this one. I'm gonna put a buy side liquidity up there. Is this a buy? Yeah. Okay. Anyway, so let's go back. I'm sorry. No. Where is it? Let me delete this. All right. So here's the setup. Bearish candle into this fair value gap. Traded higher, not just traded, but closed higher. And boom. Market entry. Boom. That's it. Super easy. Now, easy to say, right? Look at this. Oh my Jesus, holy baby Christ. Look at this. This trade, you would be sweating in this trade for 2 hours and 25 minutes. 2 hours and 25 minutes you would be sweating in this trade. So, but still, 1 to 2 risk to reward. And you still have that buy side that I draw up there at that swing high. So you could be just chilling here, you know, even leave the computer, you know, just go on with your day. You know, at this point at 11 a.m., if I'm still in the trade, I would have just leave the computer, right? Why sit here? But again, patience pays. And look at this beautiful 2R. So let's just, you know, look at the same day. It's still the 5th of November. 2R here, nothing specific. Didn't switch time frames. Didn't do any crazy analysis. 2R, negative 1R, plus 2R. How much is that? Now that's 3R there. 3R. Now it's up to you how much you risk on a trade. If you go with $200 on a 50K funded account, you know, somewhere in the ballpark of $600 in profit. Even if you count down some commissions with micros, blah, blah, blah. You can add to your targets, by the way, a few more ticks. Sometimes I do that. Sometimes I add a few more ticks to my targets to cover the commission. But, you know, you should be in the ballpark of, you know, $550 to $60 if you risk about $200. And you were just chilling. No analysis paralysis, all right? So this was the AM session. We move forward. We do have some fair value gaps here. Inversion gap. It's not valid here. So we have an inversion gap here. It's not valid. Okay. And then higher. Nothing special. Okay. Just going higher. Almost like a good setup here, but it's outside of the kill zone and after the not market close. But I'm just curious. I would have not taken this trade 100% because it's after 4 p.m. I'm just curious about the risk to reward ratio here. I would definitely not take this trade. Almost valid, but 1.7R here. But you had to get out from the trade somewhere at, well, yeah, almost a 1R. Anyway, doesn't matter. This was a good one. Let's go. Let's move forward. I think you guys starting to get an idea of what I'm looking for. And this is something I'm, in the past couple of weeks, I'm looking for in the London and New York streams. Now, how long is this? All right, 1 hour and 12 minutes already. I don't think I want to do it this one longer. Maybe in the next video we're gonna dive down into the 1 minute time frames a little bit longer, and we're gonna still do the same thing that I just did. You know, mark up the 5 minute and the 15-minute gaps. We're gonna go into, so we're gonna mark up some 5 and 15-minute gaps too, but we're gonna go down to the 1 minute and try to filter out some trades. And you know, I think we can assume that, I mean, we can just say that briefly that I mainly talked about the 5 minute levels here and entries, but as you see, I wasn't really switching all over the place. I was just looking for market structure, possible levels, fair value gaps. But you know, let's just call this video here, and this should be, maybe I'm gonna continue this with a part 2 for next time, but at least you can understand now what kind of concepts I'm looking for. And just for real quick, let me look at this London session. I'm not gonna mark up everything here, but let me put a 2 a.m. marker right here. Okay, so this candle is not valid because this one traded higher with 1 tick, so this is not valid. Nothing here, nothing here, nothing, absolutely nothing. In this London session, I can already say that, well, shoot, we just had, no, nothing in this. So this is a perfect example again that we had nothing in this London session. Absolutely zero trade. Which is good, because it helps you to filter out some entries. All right, let's look for the New York kill zone. Darn it. I don't like this. There would be a possible short entry here, damn it, which is a loss if you want to be real aggressive like I used to do sometimes. I don't know if there was some news. Obviously you have to, yeah, there you go. So this is a loss. Stop loss would have been here. Sorry. 1 to 2 down there. This would have taken me out. Okay. Never mind. So this particularly is a losing day. Market open, nothing special. All right. So there we are. It's almost like a seek and destroy day. So we might be able to win some of it back. Because look at that, I already see it. Right here. Boom. Yeah. So interesting, but I'm glad I found this. We can see that this bearish candle already repriced, and this bearish candle rebalanced this 5-minute BC, buy side imbalance, sell side inefficiency. So this has been rebalanced by this. You could say that, okay, but hey, this candle already repriced it, so what about this? I'd say this is still valid because the majority of the body is still in the gap. And the next candle created the perfect reversal, like textbook perfect reversal. Textbook, guys. Still a good time, 11 a.m. It's not bad. It's good. There you go. Boom. Long entry right here. Boom. Boom, boom, boom. Negative 1R, +2. It's not that bad. And the rest of the session is garbage. There you go. Full garbage. Nothing here. I think I talked about this with Paul the other day, and look at how bad it is. It's the perfect example of the no-go zone. Anyway, I mean, taking 1R is not a bad thing. No trades in London. One trade, yes. Plus 1R. It's not a bad thing, I guess. Anyway. So these are the things I wanted to share of what I'm looking for in the last couple of weeks and months in the market. These are the levels. These are the areas I'm looking for. Yet, I'm not looking for 10R trades. I'm not looking for 50R trades or 200R trades. I would love to. Obviously, you can change this however you want to. You can always leave a runner for a significant low or high or level of liquidity. I used to do that too. But just to let you know, again, what I said in the very beginning of the video, I backtested these entries. Like, I went back to like quite a few months, like this year, last year, and countless weekends and hours. I don't even know how much time I put into backtesting these kind of entry models. And obviously I'm using ICT concepts to look at market structure, to look at drawn liquidity levels. And there's a lot more to this. So this is just, I would say that this is part one. But we can talk a lot more on the 1 minute and so on some key levels. So there are some details I didn't even talked about yet. So I think I can fairly say that this was just some major overlook of the concept. It's not my concept. It's not even a concept, but this is something I found very interesting because this here, if you do this, only this on the 5 minute, I think it helps to eliminate the emotions, fear, confusion, helps you to stay on track. If I take a loss on this, like for example this one, after taking this loss, I'm okay. I'm perfectly fine because I know that down the line there's gonna be more winners. I'm perfectly fine with it, and it's not messing up my thought process. I'm not putting this to break even. I'm not messing around with the trade. But again, it's easy to say, right? when you go into even just to an evaluation account, just try it on evaluation account, feel the pressure, put a bit of a skin in the game, and try it out. Forward testing is the real thing. Back testing this. So if you have any kind of back testing software, it's not going to be the same because you can rewind, there's no pressure, whatever, blah, blah, blah. In the live market, forward testing it, that's when these things really showing up, if it works for you or not. I know it for some of you guys, it might sound great or super easy, but there's more to it. Practice. Anyway, I hope you guys liked it. Again, I would love to hear your comments or read your comments, and please like the video, and try to do more of this, and subscribe to the channel. And I know, again, if you're watching this as a premiere, I couldn't be here because I have some important places to be, but I'll be in the London session again and in New York as always. So this was a special event, and what can I say? Thanks for watching, and see you guys on the next live session, and have a great day, everybody. Thank you again. And you know what? Let's not forget the applause. Cheers, everybody. Have a great day. All right, I'm off. Cheers.